The Dow and S&P 500 rising Friday on strong economic data. Well, let's find out what that means for inflation and for investors. We're joined by Ken Kamen of Mercadien Asset Management. Good afternoon. Happy Friday to you, Ken.
To you as well.
Thank you. Well, strong U.S. factory data with a surprise increase in the Purchasing Managers Index, but that survey also noted that manufacturers are struggling to find labor, which could imply, wage inflation. And so isn't this a negative given the market's fears of inflation, or is the investors feel that, hey, don't worry, the economy is so strong we can pass on those costs?
Well, I think there's a number of things. The Fed keeps telling us that these are transient factors, that this is really a supply-demand imbalance. And in many cases, it has to do with companies that in the past, in the onset of COVID, really reduced ordering and reduced their inventories, battening down the hatches for what has not turned out to be a longer period as they thought. So now demand is really ramping up for everything, that inputs, raw material, and factory goods. And I do think it is that kind of imbalance, but I also think that some of this is going to creep a little bit longer than maybe the narrative would have people believe. It's going to take a while for things to catch up, for supply chains to really catch up. But we're also seeing some raw material costs like lumber and other things start to moderate a little bit. So I think some of this is kind of that beginning noise that happens when everything reignites.
As you mentioned earlier, the Fed Chair Jerome Powell insists that inflation is transitory, that is temporary. Wall Street's current fears of the inflation, however, do you feel that they are justified or are they overblown?
Well, I'll say I hope that the Chair Powell is correct there, that they are transitory. I think it's really too early to tell. Demand is also going to be affected when the COVID vaccine, the benefits of the COVID vaccine spread further around the world. We're not the only consuming country waiting to consume more. So, there's going to be a worldwide kind of grab for raw materials. So I think it's a little too early to see whether it is as transient as we hope, but I do think that it's not the right time now to get your portfolio so kind of crazy about it, or maybe your brain worrying about it too much, because we're not going to know the answer for a while, and the market's already baked in the idea that for this year it's transient.
So do you feel that it's overblown as of right now? The markets have been trading lower.
Yeah, listen, the yield is telling us that. That's been a lot calmer. So we're getting signals. I think the market's already priced in that this concept, as we said, that is supply imbalance, through the remainder of the year. I think we'll all be in a better position to answer your question more succinctly, probably in the third quarter.
Well, Ken, next week we get numbers on personal income and consumption, as well as that personal consumption expenditures index that the Fed likes to look at. How important will these numbers be to assuaging investors' fears over inflation or actually heating them up further?
I think the only thing that's going to be an issue is if any of them turn out to be a real surprise. If spending power goes down, we're really reinflating. There's so much money continuously sloshing around the economy, more coming from governments and more actually being proposed, as we all know, in Congress. So I think the surprises, if anything, would be to the downside. But I would certainly paint me very surprised if they don't look as robust as people are expecting them to be.
And Ken, today, Bitcoin is trading down 9% after China says it'll crack down on Bitcoin mining and trading activities. We've seen recent pullback, not just in Bitcoin, but in other cryptocurrencies, as well as commodities, as well as SPACs and stocks. So what is this now? Are we... Is it getting to become a risk-off environment? Is the market setting itself up for a correction? Is there something to read into Bitcoin?
Well, actually, I think people really have to recognize that cryptocurrencies are not the market. They're a separate thing. There's certainly a spot where a lot of excess liquidity is going, but the dynamics of supply and demand specifically in cryptocurrencies or Bitcoin is really not the fundamental dynamics of the market. So I wouldn't really be in the camp thinking that the Bitcoin price or the crypto fluctuation portends what's going to happen in the market. I don't think those investors in many cases are the same type of investor that as it comes down, people are going to get margin calls and the types of things that you see in these contagion types of things that we've historically had to live with.
All right, Bitcoin aside, the market, next leg up or down for stocks?
I actually think the next leg, once we've been in a trough, if you actually kind of look back of where we've been for a while, but I do think the next leg is up because I think as people still continue to come out and play and vaccinations increase worldwide, we're seeing Europe start to open up or say they'll open up to tourists. I think that's all going to lead to substantial economic activity. So I do think that the next leg, once we break out of this trading brand, is going to be to the positive.
Thanks, Ken.
Thank you.
Well, thanks to Ken Kamen of Mercadien Asset Management. I'm Fred Katayama in New York. This is Reuters. Have a wonderful weekend.